Hello and welcome to this week's edition of Tax in 10 with me, Rachel de Souza and Andrew Robbins. We are both tax partners in RSM's London office, and between us we have over 50 years of experience in advising on tax matters. This vlog is aimed at private client professionals, fellow tax practitioners, bankers, lawyers, trustees, etc., who have a focus on private clients and private wealth.
Well, I'd like to start by it's a bit depressing that we have over 50 years of tax experience between the two of us.
Actually, I didn't count it up properly. I dread to think what the actual number is.
And I think that comes out as well in your way of pronouncing vlog. This week, Rachel, I want to talk about secret agents. You will have seen recent headlines in the papers about HMRC creating a secret unit set up to look at FICs. And I just have visions about how fantastic this secret unit is going to be. So in my mind, they operate out of a bunker somewhere in central London. And I think that they have, Smiley style networks across the country. And as soon as a message comes in on the big computer display at the heart of the bunker saying somebody's creating a FIC, then you get a special agent rushing down into his Aston Martin, speeding off to Newcastle to track down the person who's creating the FIC before disappearing back off to London to drink martinis. As a result, I want a new job. I want to go and join HMRC's new secret service.
Andrew, I think you're getting a bit carried away. But also, you're telling me that it's a secret unit, but surely if you know about it, it really isn't secret. What's it actually doing? And before we get there, I think we need to explain what is a FIC.
A FIC is a family investment company. And a family investment company is an investment company for families.
Well, that's clear. Thank you very much. But there's also something called a PIC. What's a PIC?
So a PIC is a personal investment company, which is an investment company for personals.
Okay, so is there a difference between the two of them?
Honestly, probably not. It's a little bit of a matter of what you choose to call it. Well, the point here really is that in both cases, whether you call it a PIC or a FIC, at heart, we are talking a company which holds a series of investments. So it might have your share portfolio in it. It might have rental property. It basically could have pretty much anything under the sun that you're holding as an investment. And it provides a convenient wrapper to put it in. You ask about the difference between a FIC and a PIC. I mean, if I wanted to draw a distinction, a PIC is likely to have maybe a single shareholder, a single class of shares. So it's just a convenient and efficient way to hold a range of assets. A FIC might get more complicated, multiple shareholders, maybe different share classes. So a FIC is, when we talk about a FIC, we typically think something a bit more sophisticated, but it's, I think, important not to get too hung up on the terminology.
Yeah, I think that's fair. And as you said, they can be relatively simple. I was going to say creatures, but they're companies, of course. So at the more complicated end, FICs use different types of share classes to provide different outcomes for shareholders. So often one of the reasons for using a FIC is to split the control of the entity from the growth in value. So we do this by having voting shares, which do as they say at the tin. All they do is enable the shareholder to vote on the direction of the company. And then we might have non-voting ordinary shares, which simply provides for the growth in value of the company to rest in those shares. We quite often see some kind of preference shares or some kind of loan arrangements also being used to fund a FIC or a PIC. And these are used simply as a convenient way to inject funds into the company, and therefore also a convenient way to extract funds without needing to pay a dividend.
So really what we're saying is, in lots of ways, a FIC is very similar to a trust.
That's true. I think that is true. But we know that over time, the government has reduced the tax efficiency of trusts. So do they now think there's something dodgy going on with FICs, and hence the reason for the special unit?
It's hard to tell, of course, because it being such a secret, we don't have all the details. But what we do know is that the unit was set up with a focus particularly on inheritance tax, which I think is actually quite interesting, because for most FICs, inheritance tax is often a focus of these structures. As you've been describing, you can give your non-voting ordinary shares to your children, so the growth in the value of the company goes to your kids, while you retain control with the voting shares but no value. But for the most part, there are tax consequences of anything you do with a FIC. So although it appears to have an IHT focus, and there is a suggestion by the fact they've got the special unit that they are concerned about, call it, malpractice. Actually, from the IHT point of view, I don't think there is much, if any, abuse going on here.
Yeah, that seems to make sense. But there's also, I guess, a number of other issues that need to be thought about. With any type of tax planning, we often see poor implementation of what's a very sound idea. And certainly in the case of PICs or FICs, there's a whole raft of existing anti-avoidance legislation that could apply to the initial establishment of the company and then its ongoing, the ongoing running of it. So in reality, do we think this secret unit might really be looking at the general compliance factors?
It feels that way. It looks like it's a specialist team who are there to, I mean, quite rightly, I think, to say if you're going to use this structure like any other, it has tax consequences, and we, the government, want to make sure that you are correctly understanding and implementing those consequences. And that seems perfectly broad and normal. Disappointingly, that suggests that rather than being my James Bond style secret agency, it's actually more of a compliance unit.
Oh dear. So I don't think there's a change in job there for you, and you can put away your trench coat and your fedora.
Very disappointing.
So in summary, what we're really saying is that a FIC or a PIC is a company used to hold wealth, and in some cases it's also used as an aid to passing wealth down the generations. As long as it has been set up correctly and all taxes properly accounted for, the shareholders will have no reason to fear a knock on the door at midnight.
So, finally, apparently there have been complaints about the highbrow nature of my recommendations that we do at the end of the podcast. Rachel, have you got any recommendations that you could share?
As it happens, I have. Lots of our team have been talking about escape rooms when we've been thinking about what team events we can do remotely. Not wanting to share my ignorance at these discussions, I have been keeping quiet. However, over the last week, myself, my husband, and our 10-year-old daughter did a real escape room. And I would absolutely recommend it. It was really great fun. The concept is you are given a setting, whether that be a ship or a prison cell or perhaps a period in history, and you have a challenge to achieve. But to meet that challenge, you have to unlock a series of clues. And these clues could be mathematical based, logical, physical. So you have to work together to unlock the clues in order to meet the challenge. Anyway, in our case, we didn't achieve the end goal, but we all absolutely loved it. So that would be my recommendation for the week.
So what you're telling me is you didn't actually escape the escape room at all. Presumably that's why we're doing this remotely. Do I need to send you a food parcel?
Lovely to have your company this week. As always, please contact us with your comments and feedback at andrew.robbins@rsmuk.com and rachel.d'souza@rsmuk.com.
Thanks, everybody.